Hello and welcome to Accounting Lecture in London Educators coffee class with Mr. Ilias, which is basically accounting coffee class. Although I'm having a tea today, still it's a coffee class. Well, many students have joined from different parts of the United Kingdom and even different parts of the world. Sharing my screen. Our coffee class. Today's topic is a Saturday. Normally we do financial accounting. Today we're going to do accounting equation. Although many students from AAT, let me admit some other students. Anybody in the queue, I keep admitting them. As I saying, most of the students from AAT, but not a problem whether AAT, CAT, ACCA, similar. Yeah, accounting equation is again another basic topic. Last week we had a discussion regarding debit credit, how to remember debit credit, pearls, debt click. Yeah, this week is about accounting equation, another very basic but very important topic, whether you're doing any level of accounting, GCSEs, A levels, AAT, ACCA. This book in front of you is from BPP8 again. We are very thankful to BPP for their books, world-class material. It's from ACCA FA1, FIA, FA1. And we're going to talk about accounting equation. This is this chapter number 2, asset liability and accounting equation. Are you ready to start? Give me some writings or unmute. Ready to rock and roll. You can write it down. Yeah, you got to be ready with your pen and paper. Yeah, I'm getting some answers. Brilliant. So thumbs up from Joe. And who else? I just had a chat with Thomas. I hope you're ready. And Mohammed, and everybody is ready. Brilliant. Yeah, great. Now, okay, let's start with the book. Is sharing this world-class material with you, accounting equation. If you remember, who remembers the accounting equation? Asset equals to capital plus liability. Exactly. Just trying to show you. Here we go, highlighting for you. Accounting equation, asset equals to capital plus liability. That's your accounting equation, making it more deep and interesting with a very fantastic example. You know, having these coffee classes gives you real life example. Here is your example. You know, maybe you are using a computer or laptop, desktop, anything. Yeah. I'm using, sometimes I use Apple. This time I'm using Windows Acer. So let's assume we are the manufacturer and distributor, in short, the business of Acer computer. Okay, Acer or Dell. Acer computer. So this is the building of ACER. We're going to talk about accounting equation only in this 10-15 minutes video. All right. So Acer has a 3-storied building. What did I say? 3-storied building. Let's draw it. Yeah. Ground floor. Don't call it girlfriend. Yeah. This is not a girlfriend. Ground floor. Yeah. Okay. First floor, 1ST, and second floor. Now, in the ground floor, Acer makes the computers. Do I have like yeah, you've got a keyboard. They make the keyboard, they make a mouse and assemble the laptop and everything. Yeah, it's a production center, right? Okay, so production. Okay, and first floor is, let's assume, admin, and second floor is let's assume finance. So don't they have so many other items? Meanwhile, I should sip on my coffee. Yeah, as I said, it's a tea. So the floor belongs to them, is their asset. Any other items in the production department? What you can imagine, heavy machineries are there. We call it P, plant and machinery. P&M, not the prime minister. Plant and machinery. Yeah. We used to call PPE, property, plant and equipment. Yeah. Where the more you learn accounting, the more you'll get to know these terms. In the second floor, you have so many other items like heating and lighting. Heaters could be there. There could be oven. There could be fixtures and fittings, isn't it? Other assets, so many assets. These are non-current assets. Do you agree with me? Beautiful chair and sofa for a beautiful lady of the receptionist. And in the finance department, you have more computers. All these are assets. Do you agree? Yes, thank you. Now, we said asset equals to capital plus liability. Let's assume the whole building and anything inside this building, like all the chairs, tables, and plant and machinery and computer, all the assets are together 1 million pound. 1 million pound. Yeah, 1 million pound. Of this 1 million, let's assume owner let's say it's my business. I started the business. Last week, I taught you business entity as well, a little bit. The business is separate from the owner. Although I am going to invest money in the business, it's business's money. You always think from business point of view. Whenever you do accounting, you think from your business point of view. So being an owner, when I put money into the business, that's called capital. Let's say you might put 0.6 million. Yeah. And what happened to the other 0.4 million? We have taken a loan, could be. It could be a bank loan or friends and family loan. That's your accounting equation, people. Yeah. Asset equals to capital plus liability. Like we had an asset worth of 1 million, I said. And of that 1 million, 0.6, I invested being an owner, and 0.4, we taken a loan, long-term liability could be, yeah, which we will repay with an interest, different story. But that's your accounting equation. Asset equals to capital plus liability. Very often in different parts of the world, especially America and Canada, capital, they call it owner's equity. Okay, owner's equity. There's a ginger tea in my cup. Okay, good for health, isn't it? So you can always rearrange your equation. Asset minus liability equals to capital. Do you agree? 1 million asset minus liability is 0.4. Left over with 0.6. Make sense? That's how you need to play around. That's your equation, people. Yeah, you need to remember that. That's the almost end of this lesson. But I'd like to go a little more with this chapter. Like assets. What are the form of assets? Stall. You got a stall. Yeah, flower and plants and cash money. There could be two types of assets. That's what I wanted to show you. Assets are two types. Non-current asset and current asset. Non-current asset held in the business for more than how many years? More than 1 year, more than 12 months time. Fixed asset, non-current asset, long-term asset, fixed. And current, the name gives you the answer. Current assets are non-fixed. Give me 4 or 5 examples of current asset. We're going to finish the video. This is our equation is done. Bank, cash, closing inventory, trade receivables. Maybe later somewhere we're going to learn more about inventory, receivables and all. These are your assets, yeah? In these assets put into the business by the owner, that's why it's a capital as well from business point of view, because we have learned double entry last time. It's a dual concept, yeah? So that's how you do your accounting equation. I would say we will keep our accounting equation till this. We have learned whatever in your business, it is an asset, but you might have taken some loan, and any asset, any money introduced by the owner in the business is a capital. So you have learned assets, current and non-current, capital as well. And liability, liability means when you take a bank loan, long-current liability. But if you take a short-term liability like overdraft, or it could be a trade payables, is your current liability. So assets, liability, and capital. That makes your accounting equation. Asset equals to capital of liability. Any question you have, you can unmute yourself. You can talk to me. I said that's all in this particular chapter. That was a chapter from ACCA book, FA1, a very beginning book, a bit of calculations given. You can always do it. Whatever I just showed you, they have done here. Of course, your asset liability goes up and down. If you buy new assets, think from business point of view, asset goes up. Yeah. If you sell it, asset goes down. If you pay by check or bank, your bank goes down, or cash goes down. And later on, maybe we're going to talk about credit sales, credit purchases. All right. I'd say that's all for today. If no more questions, let's keep it till this is just less than 10 minutes, our lesson held today. Tomorrow, we will see with management accounting, a little bit of management accounting. These videos will be uploaded our social media. You can check it out from there. Thanks for joining in. If you want to say anything, would be good. Otherwise, you can say thank you. We can take a leave. Any question from anybody? Thomas, Joe? Thank you, Thomas. You're welcome. Yeah, we can unmute and say, so to hear. Yep. And anybody, Mohammed, Those of you who have joined, well done. Thank you very much. Hope to see you in some. Joe says, thank you. We'll tune in for tomorrow in management accounting. Brilliant. Yeah, see you tomorrow. And goodbye from, again, ACCA. On behalf of ACCA, I always welcome in the weekend classes, coffee classes, counting coffee
See you
class.
tomorrow. Thank you.
Thank you, Thomas. Thank you. Bye-bye.
Bye-bye. See you. Bye.
Bye.